Nobody ever sat you down and explained how money actually works. Nobody told you how wealthy people keep getting wealthier. They just left it out, and that was not an accident. In the next 8 minutes, I'm going to explain every stock market term you need to know in plain English. No textbooks, no confusing jargon, just the honest truth. If you have ever opened an investment app and felt completely lost, this is for you. Listen, before I forget, I need to tell you something right up front. There is a hidden piece of information connected to what I'm about to explain. It directly affects your wallet and the money you are working so hard to save. I will show you exactly how to get your hands on it in just a couple of minutes, but keep it in the back of your mind as we go through this. Imagine your friend opens a pizza shop. Business is incredible. She wants to open 5 more locations but needs money. So she says, "Give me $1,000 and I will give you 10% of every dollar this business ever makes." You say yes. Now you own a piece of her business. That is a stock. A stock is a tiny piece of ownership in a real company. When Apple makes money, your stock goes up. When Apple struggles, it goes down. Now imagine that happening with thousands of companies, millions of buyers, millions of sellers, every single day. That is the stock market, and it is the greatest wealth-building tool ever invented for ordinary people. A share is one individual unit of stock. If a company is a chocolate bar, one share is one square. The share price is simply what it costs to buy one share right now. Market cap is the total value of a company, share price multiplied by the total number of shares. Large cap means over $10 billion. Think Apple and Microsoft. Mid cap is 2 to 10 billion. Small cap is under 2 billion. Faster growth potential but higher risk. Every company has a ticker symbol. Apple is AAPL. Tesla is TSLA. Amazon is AMZN. That is the code you type when you want to buy. Your portfolio is the collection of all investments you own, and diversification is the golden rule. Spread your money across different companies and industries so that if one crashes, the others hold you up. Now here's that hidden truth I mentioned earlier. You can know every ticker symbol in the world, but if you do not know exactly when to buy and when to sell, Wall Street algorithms will drain your account dry. That is the hidden danger, taking money straight out of the pockets of hard-working Americans. The big institutions use precise signals to know exactly when a stock is about to move, leaving regular folks holding the bag. I found a way to see these exact same signals, and it completely changes how you protect your money. I cannot put the link directly in this video because big financial channels flag this kind of behind-the-scenes transparency, but I want to make sure you have it. Go over to my Instagram and send me a message with the word indicator, just the word indicator. I will personally reply with the exact tool that shows you these hidden signals. Grabbing this is like getting the answers to the test before you take it. Do not wait on this. Message the word indicator now so you have it ready. The stock market has moods. 2 animals represent those moods. A bull market is when stocks are going up. The economy feels strong, people are optimistic, everyone wants to buy. Bulls attack by driving their horns upward. A bear market is when stocks are going down. Fear spreads, prices drop. Bears attack by swiping their claws downward. Now hear this clearly. Every single bear market in history has ended. The market has always recovered, always gone higher than before the crash. Always. The people who lost money were the ones who panicked and sold. The people who got rich were the ones who stayed calm and kept going. Bear markets are not the end. They are sales, stocks at a discount. The wealthy see a bear market and they buy more. A correction is simply a 10% drop from recent highs. It is completely normal. And volatility just means how much a stock swings. Experienced investors expect it. They planned for it. By the way, I see a bunch of you already heading over to Instagram to message me. Good for you. The folks who already grabbed that breakdown are steps ahead, but you can still catch up. When people say the market is up or down, they're usually talking about an index, a group of stocks that gives you a snapshot of the whole market. The S&P 500 tracks the 500 largest companies in America. Apple, Google, Amazon, all in there. This is the most important number in American finance. The Dow Jones tracks 30 massive companies and is the oldest and most famous index. You will see it on the news constantly. The NASDAQ tracks over 3,000 companies, mostly in technology. When tech is up, the NASDAQ is up. A broker is the company that lets you buy and sell stocks. Fidelity, Charles Schwab, Robinhood. You open an account, deposit money, and they give you access to the market. A market order means buy this stock right now at the current price, fast and simple. A limit order means only buy if the price drops to a specific number you choose. You are in control. You set your price and wait. The ask price is what sellers want. The bid price is what buyers will pay. Going long means buying a stock expecting it to rise. That is what most investors do. Short selling is the opposite, betting a stock will fall. That is advanced territory. Learn the basics first. A stock at $5 is not automatically cheap. A stock at $500 is not automatically expensive. Price alone means nothing. The P/E ratio, price to earnings, compares the stock price to how much the company actually earns. Lower can mean undervalued. Higher means investors expect big future growth. Context is everything. Think about that for a second. Misunderstanding price is costing the average American household hundreds, sometimes thousands of dollars a year without them ever realizing it. They buy because a stock looks cheap and lose their shirt. That breakdown I'm sending on Instagram covers exactly how to stop doing that. Just message the word indicator so you can protect your hard-earned cash. EPS is earnings per share, the company's total profit divided by the number of shares. Higher EPS means more profitable. Revenue is total money coming in. Earnings is what is left after expenses. That is the number that actually matters. Dividends are cash payments some companies send to shareholders just for owning the stock, usually every 3 months. Dividend yield shows that payment as a percentage of the stock price. 3% yield means $100 invested pays you $3 a year just for holding it. An ETF, exchange-traded fund, is a basket holding dozens or hundreds of stocks. You buy one share of the ETF and automatically own a tiny piece of everything inside it. The most famous ETF is SPY, which tracks the S&P 500. An index fund works similarly. Warren Buffett has said most people would build more wealth by buying a simple S&P 500 index fund than by trying to pick individual stocks. That is the power of index investing over time. A 401k is a retirement account through your employer. Money goes in before taxes and grows tax-deferred. If your employer matches your contributions, take every single dollar of it. That is free money. A Roth IRA is a personal retirement account you open yourself. You invest money that has already been taxed, it grows completely tax-free, and you pay zero taxes when you withdraw it in retirement. For young investors, this is one of the most powerful tools that exists. When was the last time anyone told you this? If you have kids or aging parents at home, securing these retirement accounts matters even more. You need every advantage to keep your family safe. That is all covered in the tool I put together. Message the word indicator to my Instagram so you can properly secure your family's financial future. A candlestick chart shows price movement over time. Each candle represents a time period. Green means the price went up. Red means it went down. Support is a price level where a stock keeps bouncing back up. Think of it as a floor. Resistance is where a stock keeps getting pushed back down. Think of it as a ceiling. A moving average takes the average price over time, like the last 200 days, and draws it as a line. If the stock is above its 200-day moving average, it is generally in a healthy trend. You are doing great. Just making sense of these charts puts you ahead of the pack. But this is the part they do not teach you. because it is not profitable for the industry if you know it. The mainstream wants you guessing at charts, but the insiders use exact data points. Message the word indicator to my Instagram, and I will send you the full picture of how the pros actually read these trends. Every investment carries risk. Anyone who promises guaranteed returns is lying to you, full stop. Know your risk tolerance, how much loss you can handle emotionally. There is no shame in being conservative. The worst thing you can do is take on more risk than you can handle, panic when it drops, and sell at the worst possible time. Dollar cost averaging is one of the smartest strategies for beginners. Instead of trying to time the market, you invest a fixed amount at regular intervals, every week, every month, no matter what. You automatically buy more shares when prices are low and fewer when they are high. Over time, this works beautifully. Stop losses are automatic sell orders that trigger if a stock drops to a set price. They limit how much you can lose on one trade. Use them. Never use margin, borrowed money from your broker, until you truly know what you are doing. It can amplify losses just as fast as gains. You now know more than 90% of people watching this. You are taking control instead of just hoping for the best. The ones who message the word indicator to my Instagram will know the other 10% and have the ultimate edge. The biggest risk in investing is not the market, it is you. Fear will make you sell at the absolute bottom, right before the recovery. Greed will make you buy at the peak, right before the crash. FOMO, the fear of missing out, will make you chase a stock that has already run up 50%. You buy at the top, it drops, you lose. The antidote is simple. Have a plan before you invest a single dollar. Know why you are buying. Know when you will sell. Know how much you are willing to lose. When your emotions start screaming, look at your plan and trust it. Discipline beats intelligence every time. You just learned what most people spend years figuring out on their own. The stock market is not a casino if you treat it with patience and respect. It is the most powerful, proven, accessible wealth-building tool that has ever existed for ordinary people. People with average incomes have retired as millionaires, not because they were geniuses, not because they had inside information, but because they started, they stayed consistent, and they did not panic. You now have the knowledge. The best time to start was 10 years ago. The second best time is today. If this helped you, share it with someone who needs it. Drop a comment and tell me which term finally clicked, and subscribe because we are just getting started. But do not let this video end and go back to doing the same exact thing you were doing yesterday. The cost of doing nothing is just too high when your financial freedom is on the line. I want you to have the ultimate unfair advantage to protect everything you just learned. Go to my Instagram right now, shoot me a message with the word indicator, and I will hand you the exact tool that takes the guesswork out of all of this. It's totally private, and it's the smartest move you will make for your wallet today. Message me now, and I'll see you over there.